Hello, everyone. Happy Tuesday. We just wrapped up another investment committee. Wanted to check in with you and tell you what we're talking about. We have a couple weeks until election day, so that is front of mind. We went over some portfolio positioning topics, and I guess we will get into it from there. So, Dawn and Jonathan, what are you thinking about going into the next couple weeks?
Yeah, I'll start, and again, I'm going to summarize something that will be noticed and noted, and I'm sure I'll get a few text messages about it, which is the decision that we're making. And this is not a call on the election or the chaos or non-chaos that might or might not ensue after it's over or not over. Um, but we have made the decision that we're going to go ahead and beef up our hedge position, our SH, which is uh, been both popular and extremely unpopular at different points in time. And I want to say the reason for that is because everything has come a long way in a relatively short time. We're back, closer to the higher end of the range we last, touched these levels kind of the beginning of September. And we don't think it's a terrible time over the next 30 days to be, sleeping a little more soundly at night and not that we have a light hedge on and that we've had on for a while, but the thing we can say categorically is the hedge, how we've used it, has really limited downside. And mathematically, that put us in a position, even post March, in the depths of the pandemic, to recover a lot more quickly than markets did. And as I pointed out in committee, we and people who pay attention to these videos, they've never seen higher numbers when they log into their account than they will today and yesterday. And the markets, of course, are still kind of, below where they were 6 weeks ago. So I think it's a little bit of a mathematical explanation to why we do it the way we do it. And it just seems like the right time to be, you know, respecting the fact that things might not continue unabated upward as they have over the last few days. So that's all I would say.
Yeah,
Follow that, Jonathan.
I'll try. And I think that's a pretty smart approach because moving into the election, there is a lot of uncertainty everywhere. Just with the election, with what our country's going to look like, with the stock market, with the bond market, how is gold going to react? Like nobody really knows at this moment, and the sentiment seems to be sort of split. So being hedges is probably smart. Um, I'm trying to look at things more a little bit long term, and what happens 12 months out from now, given the things we know are going to happen, and not so much the uncertainties. And it is a little it is a little worrying to me too, depending on what time frame we look at. Um, I would say that the stock market right now is a little bit overstretched, and it's going to limit how much higher it can go uh, in the future, in the 12 to 18 months. For example, our government has borrowed trillions of dollars in debt to create these programs for America, and eventually that debt is going to have to be paid back. So you can think of it as like we're borrowing from our future and spending that today. Well, that means that your future is going to be limited, and the stock market has done the exact same thing. These gains that we're seeing are borrowed from the future, and we're spending them today. So the upside in the future is limited, especially, we're trading today with zero interest rates, and valuations look like they're going to stay at zero forever. They may stay at zero for the next 6 months or 12 months or even 2 years, but they're not going to stay there forever. So that means something is coming. And, it's good to be prepared that way. And Don, you said it in the last investment committee. I remember the one last week is that, it doesn't really matter what the market does because we're invested in companies. So I really like that. And I think that's true. I know in the strategy I manage, I'm moving more towards that over the next couple weeks and moving more towards the companies that we want to be invested in and sort of try to balance out our market exposure given the uncertainties.
Great. So taking a step back, you each run different strategies, but the consistent move is slightly increasing the hedged positions over the next month at least, to protect for election volatility or just provide some better kind of sleep at night activity. And then building up kind of our highest conviction positions for that time as well. So I think that pretty much sums it up. Don, Jonathan, you have anything to add?
Not really. Just buckle your seatbelts. It's going to be a crazy next 4 weeks, and so I will root for America as I always do, and believe that somehow we will get through this stronger on the other side. I don't know why I believe that, but I believe that. I will keep believing it.
All right.
So,
Thanks,
that's
everyone.
it.